Good morning all, hope you had a good weekend. We're back to Monday again. That weekend just went really quickly. We've got the FOMC this week, so all eyes on that. We are risk off at the big picture, which tells us that the retail guys are long on indices on a weekly average. So that's quite bearish. VIX is above its 52-week midpoint, which we call the yearly pivot. That's at 26.5, we're at 33.4. So that's looking quite heavy. And we got the strong dollar on all time frames, and we've got the weak yen on all time frames as well. Looks like CAD and Kiwi are trying to get a little bit of reversal going on, but at the end of the day, the dollar is still mega strong, and the yen's quite weak, as you can see. We might see a bit of pound strength according to the synthetic sentiment, potentially, and a little bit of Kiwi weakness. It's still quite early, and it's going to be quiet because we're bank holiday as well. Dollar is green, so it indicates buy, so maybe an eye on dollar as well. Yeah, that's subject to change every 15 minutes. If you do see this on the dashboard, this changes quite frequently. By the time you probably see this bulletin, this would have changed quite a bit. And so just so you know, it's on there on the dashboard there. So that's that. So S&P is a sell. We had to flush them out, but yet they went long, which is a bit crazy. It continued to fall. We fell 3%, and they were buying the dip, so of course they get punished. So I am completely out now. I had a long, but I took it like a loss. I cut my losses, and I'm really glad I did, because it did really fall, and I would have had like a fairly significant loss. So you've got to know where to exit. You've got to look at levels. Just simply look left, wait for a candle to confirm the move. But you can see how we had a technical break there, but then, and also the sentiment was saying to sell. So it was a bit risky that I did actually buy, because at the high level we were sell, as you can see by the red. But I figured we might come down. They might actually get stopped out, but it looks like they didn't, and they continued to go long. So that's the S&P. So I haven't got any trades running whatsoever. And today I'm just going to be scanning charts, looking at opportunities, and probably just like tidying up and things like that, sort of recalibrating, because it was a bit of a loss that I had. So I'm just going to just take it easy, and I'm going to see what opportunities are around. I'm going to probably use this as my basis for trades. So I want them to be a bit darker on their hue before I get into any trade as well. And it might be an idea to potentially avoid the dollar when it comes to FOMC as well, because that's going to spiral and it's going to roller coaster as well. So if you're going to look for like a trade opportunity, maybe avoid the USD, because it's going to be pretty volatile by Wednesday. But if you're looking for intraday scalping, that you can do whatever you want. But if you're looking to hold a trade, be careful with the dollar. It could do very well, or it might just reverse, depending on Powell really. So yeah, it confirms the sell idea, and we're not out the woods yet, because if they buy this dip, it'll come down even more, and we might even breach 4,000, which would be really crazy, but it can happen. If they go long, we'll have to come down and punish them. So that's how it works. Gold it became a buy because they sold against the 21 moving average. Up we came a lot, and then of course it come down, and they tried to buy the dip. Those people who wanted it above 1900 bought it, and so now we're quite significantly below 1900. So it worked as it's quite evil really, I suppose. At the end of the day, it's a trap and another trap. So that's that. Yeah, so sell there is indicated. They got burned in their shorts, up we came, and now they're getting burned on their longs, down we come. So this tells us not to marry any idea, but trade what you see, not whether you think gold or anything should be at X or Y level. This is really causing a lot of problems, because retail guys are thinking, oh, we need to be below 1900. That will confirm the bearish idea. Well, not necessarily, because if everyone thinks that, it's going to do the reverse. So just don't think of numbers as lines in the sand. You want to be looking at your sentiment as well. It's obviously it's a good idea to look at levels, but you know, you want to try and marry the sentiment up as well, because this is more powerful, I think, than the technical. This drives the price direction. Yeah, so the 30-year really spiked, so that's going to help UJ long. This is still inverted, the 5 and the 10, so you know, that's a concern for risk. And this isn't a very convincing risk on sign. That needs to come down, ideally. You know, that was from the aftermath from Friday, so future's still red, which isn't too surprising. Remember, it's bank holiday in Europe and UK. I think it's in Europe, I'm not sure, but I know for definite it's bank holiday in UK. Swiss yen has the highest correlation with US 500 at 66% probability there, which is okay but not great. So there's a 66% chance when Swiss yen makes a bullish candle, the US 500 is going to do the same. So it's not that great correlation, so bear that in mind. Kiwi yen is negative correlation, so that's interesting. Euro pound's greatest sell, you can see by the red and red, and you've got the dollar CAD as being the greatest buy. This is from the FX yen client sentiment since last Monday, and yeah, so that's quite self-explanatory. You want colours to match, basically. And now talking about colours to match, cross yen are matching EJ, pound yen, AJ. See, green, 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 green. Dollar CAD, dollar Swiss is green, green, green as well. Euro USD is red, 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 which is saying sell, and gold is saying sell too. So, you know, that's just confirming that, you know, these cross yen are going to be buy. So be careful. They're still trapped, and the yen bubble is still sell. See, they've gone. It's in the strong sell section. The yen bubble. Largest mover by a mile was gold. They really went long, and so became a sell. Obviously, they really shifted that gold bubble. Largest stop loss cluster is Euro USD. There at 109.50, and it's really old. Really old. Size is 4.117, so 4.17. So there's quite a lot of liquidity at that level, 109.50. So bear that in mind. We might, you know, to become up there, but it's hard to say. It's maybe we'll come up there. It's, you know, we are a sell at the high level, and the low level is confirming the sell. So probably it should be safe. Location above, yeah, it's really old. Done that bit. Signals update. Now the dollar CAD was 106 loss, pip loss for us on Friday. So it kind of confirms that Friday can be payday for the retail crowd. 106 loss. This takes our weekly total to 76 pips minus. Had it not been for dollar CAD, we would have been up. We would have been up 30 pips. And another caveat is that if we had let the good trades run, like pound yen, on the Wednesday, I think it was. Yeah, see, we got 55 pips, but it actually was 200 plus pips. So we might have to revisit the idea about, you know, closing profitable trades. If it's up, you know, by a lot, we can keep them running. So that's like a little caveat there, is that we would have been up more had we let the good trades run, and we could have been a little bit more careful because it was Friday. So we'll see how we do this Friday. If it's going to be a negative day, then we can just simply ignore the signals on Fridays. So that's that. So we may have to look at the 10 PM reset close for the signal. And don't forget, Friday was really volatile, risk appetite. You know, we had things falling 3%. Amazon fell 13%. We're now officially bear market territory on the NASDAQ. And all this stuff going on, fundamentally bearish stuff going on. And don't forget, we've got the Ukraine, Russia, we've got the Fed tightening, we've got that gas issue in Europe, the gas pipeline issue, and you know, and central banks are going to want to be tightening because they want to follow the Fed, and that's what eyes on Powell, I think, on Wednesday. So I'm going to do a COP data video, and then I'm going to put my feet up for the rest of the day, and I'm going to be scanning charts and consolidating and seeing what opportunities arise. We might have pound strength, but it'd be better to probably look for dollar strength because of the big picture, but to be careful with the dollar on Wednesday as well. So have a good day, and just trade what you see potentially. Don't think it needs to be below X or it needs to be above Y. Just trade what you see. Sometimes when you think too much, then you can overanalyze, and this is maybe why I had a bit of a loss on this, because I was pretty much convinced it should be coming up, but you've got to remember the sentiment. It was a sell. They're 64% long, so it really shouldn't be going up because they're long. It would just mean payday. So we'll have to wait and see, and fingers crossed we have a good week this week. We might want to let the trade run, you know, into big profit, which would make sense, but we'll have to wait and see, and we have to decide what we want to do, whether or not we are going to close the trades every day, or we can have like some kind of rule where we're in big profit, we just let it run. So perhaps what I'll do is make a note on the Telegram, like to say let it run, and then that way we can just adjust that pip value on the spreadsheet. So have a good day, and I'll speak to you soon.